So, today's June 10th, Tuesday, 2025, and this is today's trade setup that I took. Right now, we're looking at gold, and right when I woke up, this is how price action was looking. Right, we have three MAs are underneath, we have price uptrending since the previous session. Right here, I saw price break structure, right? Came up, broke structure, consolidated a little bit right here, and then continue up. So right there, right off the back, I'm already looking for buys on gold, right? And this looks just like yesterday's setup on Nasdaq. Just price action looks a little bit more cleaner, right? Because Nasdaq yesterday had the same thing. It had a broken structure, and it had a demand zone and a support zone. Which the support was the resistance zone, right? Because price kept coming up, bouncing off, and then it finally broke through that resistance. Now making that resistance support. So I drew these two demand zones right when I woke up because that's what I saw. And I was like, okay, price has the potential to either come down here, reject off this demand zone, which is the top of the support, to then continue the trend, the uptrend, right? Or come down here to the base of where price was consolidating before it broke structure, right? So it's that main support. I mean, the main demand zone right here. After that, I drew my zones and I was already up. I was just waiting to see what price was gonna do and see when price will break, whether it's gonna break our zone or just reject and give us a entry candle. That's what I just waited for. Here, price hit our zone and rejected, kind of giving us okay a confirmation that it might go up, but I wasn't really feeling it. Then here, boom, price just kept going down. Honestly, it didn't give us our entry would have been the break of candle. So if price broke the candle high, the high of the previous candle that closed, then I would have got in for the trade. But price never did that, so I didn't get in. Right here, price broke the zone, so this zone was already invalid. And even though price broke the candle high here, I didn't get in the trade because the zone was invalid, right? So I just continue waiting and see if price was gonna hit our next zone. And bam, that's what happened. So as soon as I saw this, that price hit our zone and this candle closed bearish and then the next candle closed bullish, literally like the same size of the previous candle, that candle formation right there is a reversal candle. It is a reversal confirmation, basically, indicating that okay, price went down and now it's kind of reversing. If you go into the higher time frame, this candle going down and going back up, it's just gonna be a big wick like this. That price just kind of rejected. Like, look, if I go to the higher time frame, oh, it's not really gonna show you, but it's a basically a reversal confirmation, which I also show in my course breakdown. Once I'm breaking down my strategy, I'm showing you also certain candle formations to look out for that would give you extra confirmation for your trades, right? Especially like off the zone when price comes into the zone and begins rejecting. There's certain candle patterns that you don't, that are kind of more iffy. Um, because let's say price closed bullish, right? This first candle, instead of being bearish, it was bullish, and then the next candle was bearish. That's indicating that okay, price might continue going down, so you're not gonna enter the trade there. You know what I mean? But since this candle went down, right, closed bearish, and then the next candle closed bullish, it's showing okay, price came down and now it might be reversing straight off this demand zone or this mean support area, right? So the next candle that broke the previous candle high, I was looking in for buys on gold. I know that was a little bit long breakdown, but once you know the candle patterns and certain patterns to look for, or just how candles move and rejections, and it's just more easier to tell when to get in on the trade or not, right? So here I got in a trade on the next candle break. Boom, this candle broke. the high of this candle, the previous candle, so I got in the trade. Since price already rejected up the zone and all that. So here I'm already in the trade and I'm just holding. My 1-to-1 is like around here. Oh, wrong thing. My 1-to-1, goddamn, is around here, and then my 2-to-1 is there. Right? So I just hold, waited, bam. 1-to-1 got hit. After that, I moved my stop loss halfway, reducing my risk 50%. Reducing my risk up to 50%. So now if I'm risking $300, now I'm only risking 150, right? And my 1-to-1 is already $300 per se, right? But in this trade, I was actually risking what, like 250? Yeah, like 250. So I'm at 1-to-1. I was already up like 260, 250, like $250, $260, right? And now my risk is at 125 instead of 150. I mean, instead of 250 or 260, right? Now my risk is at 140, 125. After that, I was like, you know what? 1-to-1 is hit. It's cool, but I'm really holding for 2-to-1 because that's what I need. I need to make back yesterday's loss 2 plus profit on today. So, and 2-to-1 is like my normal R to R target, right? So I just kept holding. I was thinking of closing out partials here at 1-to-1 because price was just kind of consolidating a little bit, right? Acting a little bit sketchy, but I was still confident because we got a mean demand zone right here. We got support and we got 3 MAs underneath. So I just stay confident, stay holding the trade. It's either now stop loss or TP. So right here, once I saw price, okay, bam. Before this candle came, price was already breaking these highs that it was struggling to break at first. So once I saw this candle and price broke these highs, I moved my stop loss to break even. So now I have no risk on this trade, and we're already up 1-to-1, which is like $260 to $300, right? So the next candle came, price kept pushing up. This was around 9:15, and then bam, the other candle came and price finally hit our 2-to-1 around 9:25. And around that time, that's when I was like, you know what? I'm gonna just close out. I don't want to be greedy and stay holding, and then price start coming down, and then I lose the trade, right? And right here is that's when I saw the other candle. Price was like kind of coming down, and I was like, you know what? I'm gonna just close out. So I closed out right here. It was 2-to-1, so I made like around roughly it was like what $500 in this trade. Not bad. Made back yesterday's loss plus some profit on top of that. So far for the week, we started off the week in drawdown, negative, and right now we finishing off the week. Well, this is the second day of the week of the trading. This is the second trading day of the week, and so far we're up like $200. Not bad. Uh, and let's see what happens tomorrow. But this was today's trade breakdown on gold. It was pretty straightforward. Nothing really crazy happened. It just took a little bit long to get there. You know, we was holding this trade maybe from maybe like an hour. I mean, that's not bad. You know, in an hour you make what you make in a 40-hour or 32-hour gig or regular 9 to 5. Depends how much you get paid. So that's not bad. That's a whole like 3 to 4 days of 8-hour work saved in just 1 day and 1 hour and one trade. So that was today's trade breakdown. Today was a wonderful day. We back in the green for the week, and hopefully we get something nice tomorrow, and we continue growing this account, and we end the week in profit to then eventually end the month in profit once again, like last month. And yeah, and we'll see what happens. See you guys in the next video.